My name is Benjamin Poole, and when I was 23, I gave my life savings to a broker who lost it all. But this taught me an invaluable lesson. I needed to educate myself to make my own financial decisions. Fast forward 20 years, I am no longer living paycheck to paycheck, and I want to share everything I've learned with you. Welcome to Financially Fit.
Welcome to Financially Fit. My name is Lawton Ho, and I'm joined by
Benjamin Poole.
Yep,
All right. I'm back. Here we go.
Yeah. It's been a couple weeks.
2 weeks, yeah. Woo.
And you guys did not fail to bring your questions. Let me take a look here.
For that, I appreciate it.
I appreciate it, and also know that we're going to do our best to answer any questions in the live chat. But every single Tuesday around 11 o'clock, I make a post on the member dashboard, and you can in the Financially Fit section asking for questions, and you can leave your questions there so you don't have to hop in chat and type it out, and you can watch it later or whatever.
Yeah, we'll try to rapid fire these questions so that way we can get to as many as we can.
Yeah, we have 23 comments right now.
23, all right. Woo-hoo.
I don't know that we're going to get through everything. We're going to do our best. One more thing to mention, guys. When we do look at these questions and you mention a stock, it'd be really helpful if you gave us some more context. If you say, look at Apple.
I'll put the Apple chart up, and then we'll look at it. We're like, all right, it looks like an Apple chart.
It looks like an Apple chart.
Yeah,
but if you said something like, look, I'm looking to short Apple, where's a good level? Or go long Apple, where's a good level? Then, we were talking.
Correct.
All right, so let's just hop into it.
Let's go.
Very first question. Okay, Christopher. Chris says, hi, Ben.
What's up?
Can you please go over the WBA chart? Walgreens. I am in a long position at 1443 with plenty of room to maneuver if it goes down. What should I do at 1443?
This is for educational and informational purposes only, so please do your own research. Okay, so you're 1443. Already you were down 25%. So if you had plenty of room to add, I would have done so at this double bottom. So what you're looking for is a turning point in the stock. So as you can see, it kind of did that right here before another fall. But you've got this pivot right here. And so then you would just take a trend line, a fib retracement. So this would have actually been a great place to get into this. Right, so WBA, if you would have gotten back into this at this 618, the 886 retracement level, that would have been the position or the area that I would have said to add to this position. Right now, you've got 1, 2, 3, 4 up candles on the daily time frame. You are creating this kind of W pattern. So if you go up a little bit more, maybe up to the $13 level, and then it comes back down, probably about to the $11.71 level, you're going to have a lot of support. I would actually wait for that, for a retracement to the midline of a W, so that you can have a WV pattern, and then you have more upside. The other option would be to wait for a retrace back down to this level. I would actually take a fib level from here to here, and then I would just do the 786 level, which is going to be a little bit different, and then I would add at that position. Being is that you're over 20% out of the money. So that's what I would recommend.
Cool. All right, next question. Gabrielle asks, can you give some examples of when the body is more important than the wick and vice versa?
When the body is more important than the wick?
The wick, yes.
So questions like this, I would need to see ahead of time because I don't really have any examples right now of when a body would be more powerful than a wick. But if you're doing like an engulfing reversal candle, for example, the body is the most important part. And if the wick goes, so it's got to encapsulate the entire thing. So from the wick to the tail, that whole move to be an engulfing reversal candle. And so at that point, the body would be more important. If only the wicks when engulfed it, then it wouldn't be as important. Also, if you're like doing topping tails and bottoming tails, if you're doing an inside bar pattern, the body is really what matters. So an inside bar pattern is essentially you get a red bar candle or a green bar candle. Let's say, for example, you get this red bar candle right here. what you're looking for is the bodies of these candles to stay inside of this level. The wicks can get outside of it, but as long as it doesn't close, the body doesn't close outside of the lower ends of the wicks. Ideally, you want it inside of this body, but as long as the wicks the body doesn't close outside of the top or the bottom, then it's still a valid pattern. You would just be looking for a sideways consolidation, either 6 or 7 candles before, and if it's a red bar candle, you would be looking for a downside move. If it's a green bar candle, you would be looking for an upside move. So that's when body candles are more important than the wicks.
Sure. Okay. Interesting question from Brad here. Brad saying, someone just opened a butterfly on the SPY yesterday. Expiration is 9/30/24, so September 30th. Strikes are 450, 400, 350. Total value of the trade is 1.3 million. Obviously, it's an institutional trade. We all know they don't lose much. Would like to get your view on how the SPY could drop into the low 400s by the end of September.
Okay, so you're looking at options, right? I don't trade options. I like to just trade the stock. So what I will do though is I will look at the SPY and tell you where the levels are. I can't give you an idea of when or a time frame in which a particular stock is going to fall into a certain level. The best I can do is I can draw a trend line. So you've got this trend line right here, right now. So here we have this trend line right here. You've got this pivot low, kind of this pivot area right here, and we tried to close below it right here. Excuse me. Came back above. Now we're trying to close below it again. So when this happens, you're actually looking for a close below, a confirmation. So you would have the body close below the lower end of the tail, and then you wait for a retrace to see the crime. The SPY, I don't think is done yet. I don't think it's fully into a downward pattern yet. It's not that big of a move. Although some people would say, oh, we're in a downtrend. Well, we're not yet. We just need a little bit more confirmation. So right now, we're still hugging this upsloping trend line. So I can't give you an idea of when it's going to happen until this line actually breaks. You will have some support right here, right above, so probably right around 530, and then just a little bit lower, probably around 520. You're going to have some support, and then you've got a lot of pivots that you've got to get through before we make that lower low. So 400, man, that's off the charts. This level right here is going to take a lot to get through. This level right here is going to be major support. So it's going to take a big effort, and actually we're going to need a lot more volume before we get a major sellout.
All right. Interesting question from Tom. Tom asks, what are the chances Meta will fill the gaps from 131 and 21 on earnings on the close today?
All right, here's the Meta chart.
So the gaps on like February 1st. What would it?
You're talking about, I'm guessing this one and then this one right here. Okay, so let me get rid of all these other lines real quick. All right, here we go. And then I'm going to get rid of the VWAP. Just hang with me real quick. Man, I got a lot of stuff on this chart. Okay, so I will say I believe that pre-market or post-market on Meta, it actually flushed on earnings. So this is the last earnings. I believe it actually got down to this gap fill. It hasn't officially filled the gap because it needs to do it intraday when the stock market is open, but it has kissed that level. I was actually trading that. I went short. I got out probably about right here. I didn't realize it was going to flush that much more. Right now, I think that it could very well flush. The problem is we have this sell-off on Meta, and so it's already down quite a bit. Yeah, it's already down quite a bit off of its highs, and so I got it. So you can see that even though it does favor still the downside because it's still in the stratosphere, I don't know if it's going to do that. If it does, it's going to flush right through those, and I think it's actually going to go to this level. Let me see what this gap fill is right here. So right around 370. So probably a pierce of 370, I would say, is where it's going to go. And with Meta, if I'm not mistaken, the last time it had earnings, it needed to report 471. Estimate was 432 for earnings, and I don't think it has to do quite as much. Oh yeah, it has to do a little bit more. It has to do 4.71. So it still has to increase its revenue from last quarter. And if it doesn't, if it falls short or even right in alignment, it's still above where it was the last earnings season. So I think it will flush out. Whether or not it does that, those are definitely some key levels that I'm looking at today, though. 394.90, 389.74, and then this major, this other gap fill, probably about 365, are going to be some pretty big levels.
Yeah, thank you so much for your question, Tom. And actually, something really funny is that Ben Poole and Dr. B are going to be trading Meta earnings today.
That's right.
Today, after hours, in the earnings trader service. So basically, if you've seen Gareth talk about the Apex day trading room, but basically, Dr. B and Ben have a service where they trade all of the major earnings, and they're actually going to be trading what is today, Meta, a bunch of stocks today. Tomorrow you have a couple more as well, and Thursday.
So we always give you guys the levels on the major stocks that we're going to be trading for that particular day before we even go live, and so that way you can have your levels set. And then when we actually enter the trade, we tell you our exact entry price. If we add to the position, we'll tell you the exact entry price that we added, and then when we exit, we'll tell you that as well. So yeah, it's a pretty cool service,
yes,
and it's a lot of fun too.
A lot of fun, and this is the best week to join because I think 4 of the Mag 7s are releasing earnings this week.
So
for the next 3 days, we'll be trading after hours. So go ahead and check the earnings traders out. Okay, next question. Let's go to our YouTube comments here. Steve-O says, any chance you could look at the GS? Look at GS and see if there's any resistance. I'm thinking about a short entry. Thank you for your question, Steve-O, on GS.
Okay. So just pulling this up, I already have some lines on here. I don't know if this is from me or somebody else. But Goldman Sachs right now looks pretty extended to the upside. So let me see this trend line right here. Let me see where this trend line goes back to. So yeah, $505 on Goldman Sachs looks like it's a pretty good level. I got to actually switch to my weekly chart so I can see where this trend line goes. All right, so here is where this trend line goes. You have all the way back to 2012. You've got this pivot, and you've got these pivots right here in 2013. And then it doesn't hit those levels again until 2021. 2020, yeah, those are 2021. And so it's right into that level right now, right around the 505. It could push a little bit higher, but this would be a great opportunity to get in to Goldman Sachs. And then zooming in a little bit more, I'm just noticing that here we have 1, 2, 3, 4, 5, 6, 7 up candles in a row. And then it looks like you've got a topping tail on the weekly. So if you're going to enter this trade, and again, this is for educational purposes only, you want to get in at or above the 50% retrace, which it's at, and then you would put a stop on a weekly close because this is a weekly topping tail, a weekly close above the high of the wick. Okay? So, yeah.
All right. Thank you for your question.
Yeah, great question. It's a great chart.
All right. I have a question that doesn't involve a chart. Okay.
It does?
It does not.
It does not. Okay.
Okay. This question says, I have $5,000 and a decent understanding of trading / the market psychology, and after 3 and 4 years of study, but I still struggle with minor losses enough to where I'm just not profiting. I can't afford most of the classes offered like the trading series, but I can afford things like the signal. My idea right now is to register for those until I bank enough for classes to eventually be self-sustainable. My human needs are met and have a lot of time to learn and make mistakes. My goal is to be a successful day swing trader, working for myself, financially free, with the freedom to travel and live a great life. What are the thoughts on the idea I have? And if you could suggest anything more or better.
No, it's actually great. You got $5,000. I will say a lot of people with $5,000, they try to go big and they try to over leverage themselves. So whether you have a $5,000 account or a $500,000 account, if you're going to go into the smart money stocks and ETFs or any of the other services, I would say stick with the position size and the percentage of the portfolio that is recommended for those particular positions. We've seen that a lot of people end up seeing the track record and then they'll get 3 or 4 or 5 or 10, 15 wins in a row, and they'll start thinking, well, 1 to 2% of their portfolio, that's not enough. I'm not making money fast enough or soon enough. And what ends up happening is that the trade that they decide to go 5 to 10% on because it's a guaranteed winner, that's the one that goes against you the most. It'll go against you the quickest, and it'll be the most painful. So if you're going to do the service, you follow it. I would recommend following it as designed, right? Gareth has been doing this for over 20 years. He knows how to dollar cost average into these positions to minimize the amount of losses and maximize the gains. So stick with it the way it's designed.
Yeah, and Ben has a trading service as well.
Yeah, if you're interested in crypto, absolutely.
And that's called the Trader's Edge.
Trader's Edge.
And he does it also with Dr. B. And we go live once a week to have Q&As like this, specifically for crypto.
Right. So if you're into crypto, absolutely. We do put posts in there for crypto that we are looking at. And then we give you the opportunity to ask questions on it too. And then if you have additional charts that you want us to take a look at, we do that as well. So yeah,
go check it out. And they're 100% win rate right now. So congratulations on that. Okay.
We are upside down in a couple trades, but we've got some shorts and some longs, and so we're kind of going with the way the market's directing us.
Cool. All right. Next question. David Stewart says, is APPS forming a cup and handle on the daily chart? Is this looking bullish? APPS.
All right, digital turbines.
It's a cup and handle.
On the daily, okay.
On the daily, yep.
So depending on how you draw this, we were kind of going over this. We were talking about this in the live day trading room. This could be kind of a pseudo, what's called an Adam. Oh, let me erase the other parts. An Adam and Eve pattern. So really what it is, it's a cup and handle that has a targeted move, right? So you just take the top of the cup, essentially here. It just confirms that it's more of a bullish signal. And so then you take the bottom here, right around 137, and this is right around 250, and you take that move up to here, and that would be your measurement. So I would say that yes, this is looking more bullish. One of the nice things I like to see as well is, I'm going to go ahead and zoom in. This is kind of what I was going over a little bit earlier when, right after I was asked, what is more powerful, or when is it more powerful, a body or a wick? So right here you've got this green bar candle, right? It's a big green bar candle. You did get outside of the green bar candle, but the wick didn't close outside of the top of this candle. So now you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 essentially bars inside of this green bar. And so this definitely favors the upside move. And so yeah, like I said, you can take that measurement that I just had in there, and then that would give you the upside target. I would definitely say go long. For an inside bar, the best entry point is right here at the low end of the green bar candle, because any close outside of this, then that would be a stop out for this, for the inside bar pattern.
Cool.
So yeah, bullish.
Thank you guys so much for your questions. Again, we're not going to be able to get to everything just because there's so many questions here. But we'll do a couple more here. Jay McCarthy says, the indexes and many stocks are becoming quite oversold. For example, the QQQ, SPX, SMH, Nvidia. Would you agree that we are set up for a good traceable bounce?
Yes, absolutely. We're in the live day trading room. We've actually taken a couple long positions. Again, these are day trades, and so we move in and out of them. Qualcomm was one, and then Nvidia was another day trade. These are all due for bounces. They could be short-term rallies. It really is going to depend on what happened with the earnings today, tomorrow, and really Thursday. That's going to shape the direction we think of the markets.
Mm-hmm. Okay, another kind of general question. We get this question so much. Apex says, I've seen that you send out in the Apex live day trading room to buy a 1/10 position signal.
Yeah, 1/10.
My question is, how the traders know how many shares to buy when you send out the signals in the Apex trading room? And we get this question all the time.
Okay, so here we go.
All right.
What you do is you go to the track record for the Apex live day trading room. It tells you the exact entry price. It tells you the exit price. And anything that says, has an asterisk that says added to position or average position, disregard that. And so let's say we're going to trade Nvidia today. You go to an Nvidia trade. You can actually calculate the amount of money that we put into that trade. And then you can see how many shares. And that's based on a $300,000 account. So if you have a $30,000 account, your 1/10 position would be dividing that by 10. And so that's how you would know how much a 1/10 position is. You've got to do your homework, but that's how you do it, right?
Mm-hmm. Yeah, and that's something that, definitely if you have more questions about, you can contact our support team and help you answer that.
But that's probably the best explanation that you're going to get.
Yeah.
Is take your account size, figure it out what it is based on, if it's a $50,000 account, then you would take 50,000 divided by, so 300 divided by 50, that's how much you would have, and then you would just know that it's that percentage of the amount of money that you would have put in.
Mm-hmm. Okay, how many more questions?
That was
you
probably
do?
more confusing than
that was.
Than it was. Anyway,
that was really confusing.
Sorry. Yeah.
In general, you can just contact our support and they'll answer that question. It's kind of difficult to explain,
right. You gotta get a feel for it. Everybody's got their own risk tolerance. Mm-hmm. That's why we don't give you out the exact amount of money that we put into the trades. So, yeah, it's going to be dependent on each person. Everybody has a different account size, and
it could be like 1/10 of what you're willing to commit to a trade, and that's different for every trader.
Right.
If he has more money or more risk tolerance, then he'll put in more, and I would put in less.
Correct.
So.
All right.
It's tough.
Cool.
All right.
Anything else?
You have a couple more questions.
Couple more
Let's
questions.
do like two more.
Two more.
All
right. Here we go.
Let's do two more questions. So let me take a look here at our YouTube.
I really do appreciate you guys asking questions.
I know, so
and
many
being
questions.
really interactive with us.
Can you check Nvidia gap at 95?
Can you just a little bit more information about check it out? Okay. So what I'm gathering is you want to know if there is a gap fill at $95. That's what I got from that.
Yep.
So this is a gap fill at 95.
Yep. There it is.
Yep, there it is. So right now, I'm just going to elaborate on it a little bit more. So we do have this upsloping trend line. You have the previous low. This was a 20% drop right here from the last earnings high all the way down to its lows, about a 21% drop. This was going into earnings. It fell a little bit and then had this huge rally. So coming back into that level, let me see how much of a percentage of drop that is. That's going to be a pretty significant drop. As you can see, that'll be a 32% drop on Nvidia. Nvidia doesn't have drops like that very often. It was down as much as 75% at one time, so that was a buying opportunity. So if it gets down to this level, the $95 level, that's going to be a huge, huge, huge gap fill. But you're going to also have some support here and some support here. Well, that's the $95, but you're going to get a bounce. That was a previous all-time high before it made this huge rally. And so right at 97.40, you're going to have a bounce as well. You still have support on this upsloping trend line as well, so you've got to get through that level. And it looks like it's probably about 101. If it starts breaking down, though, I think you've got quite a bit further downside. Probably even eventually come fill this gap right here, probably around $65. It'd be a substantial drop on Nvidia, but could happen.
Could happen. Okay, last question.
Last one. Here we
Last
go.
one. Okay, Aaron says, hello, Ben and Lawton. I wanted to get some input on my parallel channel drawing skills from the pros.
Sweet. So you got this one?
I got this one.
All right, here we go.
On the Bitcoin daily time frame, I see an upsloping parallel channel starting on July 3rd. I'll let you bring that up first. July 3rd at 53,470. July 3rd, 53.
I have lots of trend lines.
Yeah. July 3rd, 53,470 on the lower end.
July
3rd. You're in February.
Okay.
July 3rd.
Oh,
So
you're
you
talking
gotta go
about
in.
this.
Yeah.
Well, it wouldn't be July 3rd then.
It says July 3rd at 53,470. So maybe.
So you're talking about July 5th then.
Yeah, all the way to July on the lower end and 59,215 on July 17th on the higher end. July 17th. Is that a parallel channel upsloping?
I'm guessing you're referring to this as the upsloping parallel channel. It seems like it would be. So what I would do is I would actually drag these. I would drag these down. So I like to try to make it fit as many pivots as possible. And so this, to me, your parallel channel looked pretty good. So this was the 5th right here. So this was the low. And so I like it that it touches here, kisses here, and hits here. And then you've got this low right here, connects through here. And so the bottom right here would be essentially your 4th hit of the parallel channel. So upsloping parallel channels actually tend to break to the downside. So this is actually more of a bearish signal than it is bullish. That, and you've got this reversal candle right here that is also signaling a bullish channel. So what I like to do is, although this is a good parallel channel, let's say this wick comes down and then we reverse, but this is the low end of the wick. What I would do is then I would change the parallel channel and I would move this down to here. I would adjust based on the price action. So just like the charts, they're fluid. And so if it got down here, then I would know that this was the actual parallel channel right here and right here. So then this would only be the 2nd hit of the parallel channel. And then I could expect a move up to the midline and then an eventual rollover, or depending on how price action got in there, then it would give me more information. So yeah, just keep playing around with them. It looks pretty good.
All right.
So
one thing to note, Joe's asking about WBA reversing. We did talk about WBA at the beginning. So,
that's right.
So after the show finishes there, you can just scroll back a
That was
little
actually
bit.
the first question.
That was the very first question. So, your question should be answered again, guys. Thank you so much for your questions. I'm sorry we couldn't get to all of them. There's
a lot.
There's a lot. But if you want private one-on-one time with Benjamin Poole without me there, or I can be there, or without anyone else asking questions, you can go ahead and visit the Verified Investing website and get a private trading session with Ben for an hour.
Yeah, for a full hour.
You can ask him anything you want, like what his shoe size is.
That's right. whatever you want.
Anything.
We'll go over some charts, and I'll give you my best analysis on the charts that you guys would like analysis on. So yeah.
But yeah, I think that's it for today.
Okay, awesome. Well, thank you guys again so much for all the questions and all the feedback. I really appreciate it. Keep in mind that this is for educational purposes only. Please do your own research, unless of course they're right, and then at which point then me and Lawton will take credit for it.
Absolutely.
So anyway, thank you guys so much, and we'll see you next time on Financially Fit.
See you later, guys.
All right, now I'm almost back on the live day trading room. Nice.
Why? You share this